Okay, good morning, folks, and welcome to a quick morning update. So we have the futures that are down this morning on the NQ, the NASDAQ 100, yet they're off their lows. We'll talk about more about the Qs in a moment because I have my concerns there. The yields are down over 0.75% on the 10-year. Volatility is down. And when we take a look at App 11 today, we closed out the day 318.24 yesterday, a down day. It looks like they're doing some selling in the pre-market here. The last tick was 311.30. So we're going to talk about possibly exiting that trade today if we get what we want. What do we want? Stick around and I'll walk you through that in a moment. But let's first talk about expectations for an ease, 59.4. That increased since yesterday. Now looking at bond yields, they look as though they want to continue to press up higher, but they've stalled out. So on the day yesterday, nice bullish reversal bar, no breakout. I think we're at a precipice because bond prices, TLT, they've stopped going down. The problem is that you have the 50-day threatening to take out the 200-day moving average. But we've seen that before, right back here in May. What happens soon thereafter? A rip your face off rally. So kind of neutral on bonds right now. The Dow Transports yesterday, nice move up higher. S&P 500, it closed up, but not a great close. It's stuck at resistance, but it's an up day. Over a half percentage point, and it was up on volume. Now, the reason why I have a tone in my voice about being somewhat skeptical tone in my voice is that it wasn't a great close yesterday. We had broken out yesterday morning, consolidated all day long, and then they broke it into the final half hour. And that was on volume. Then when we take a look at the mid caps, they did great yesterday. Small caps, this is the IWM, great yesterday. Relative to the triple Qs, which closed up, but I'll tell you, this reminds me more of a bear flag setup. It's still healthy, volume is good, but let's take a look at the closing price action. Not great. They sold it into the close and they did it on volume. So I think that what we're looking at here is more a story about sector rotation. The only thing that gets me is that you're seeing yields move up higher along with small caps and mid caps, and the mega caps are lagging. Normally, you do not see that. Now, if bond yields were dropping, I would say, okay, that makes sense. So are traders expecting or pricing in lower yields? They must be. But the price action on bonds and yields did not confirm that yesterday whatsoever. Now, looking at some of our positions here, FLNG, remember why we're in this. Here's the monthly chart. Very, very nice. Tight Bollinger Bands monthly time frame. If you go to the weekly time frame, same deal here. Nice tight Bollinger Bands. Energy appears to be waking up here. Energy stocks did well last night. I was bearish on them the other day because oil was dropping. That's since changed. Oil's now done a reversal bar on the week. Therefore, now I'm an opportunist. Now I'm bullish on the energy stock. Gold on the week. I booked profits yesterday on the futures contract that I had here. I think now we need a higher low. And that sets the stage for new higher highs in the dollar, assuming that the dollar doesn't continue to break out. A big move yesterday on the dollar. Nugget didn't care about the dollar yesterday, up 2.3%. How long does that last? Not quite sure. If the Russians and the Ukrainians play nice, then that current correlation is going to reverse quickly. GDXJ, same deal here. Now, the other positions on the week, AI has us up 34.63%. Yes, we are overbought. I'm going to keep this one, though. This is, I think, a longer-term play. So I'm not going to trade out of this. SoundHound, good day yesterday, up over 8.33% on volume. CSX, this is a weekly chart. Good day yesterday. The thing to remember is that what we have here on CSX, and it's critical to remember, the Dow Transports have broken out on a weekly and monthly time frame. CSX is validating that. It has broken out. It broke out 3 weeks ago. Pull back, retest. Good stuff. And here's the daily chart. Up 2.23% yesterday. Really nice candlestick. We like those. Now, to our short with Microsoft, something's going on here. These triple Q names are not looking good. Microsoft, remember, we have a short position. Every time they try to get a bull setup formed, it fails. They did it back here. They did it here. Then they got follow through. Failure. Left shoulder, head, right shoulder. Close below 405, and this thing's done. stick a fork in it. Meta, that was down yesterday. We had no position here. The Google, that broke down yesterday. 4.74% down on the day. Yet the Qs closed up. Netflix, one of the reasons why. Closed up 1.54%. I would not short this, even with RSI 82. Why? The markers aren't there yet to say short. Volume is still grinding up higher. MACD histogram grinding up higher. Momentum is building, not waning. So don't get in front of this thing to the short side. Tesla was down yesterday. Now, NVIDIA eked out a gain yesterday, but let's face it. They had good earnings, but there are good earnings, and then there are expected earnings, the whisper number. There's a tremendous amount of expectations to beat on NVIDIA, and they beat. But clearly, this candlestick is saying, milquetoast, even though they had phenomenal numbers. That's the street. They closed down in the after-hours session on earnings, closed up fractionally yesterday, so we'll see which way it goes. Palo Alto Networks, good-looking chart here. We have no position, but nice outside reversal bar. They reported earnings this week. SMCI, we booked profits yesterday. We're up over 50% on this trade. We bought it back here on that gap down. I just worry about the headline risk. We had a profit. We made it real. Therefore, first out, best out. Apple, we have no position here, but I'm bringing this up because Apple and Microsoft are the largest components of the triple Qs. Now, Apple is up on the week, but on the day yesterday, it was down. A lot of these names were down yesterday, yet Qs closed up. So I think there's only a couple of names that are driving it up higher. Netflix, NVIDIA, because it's certainly not the top tier. Apple and Microsoft, which make up the biggest components of the triple Qs. Now, Datadog on the week, we're up, on the week alone, up over 14%. Now, this is a very, very expensive stock on a price-to-sales basis, on a price-to-earnings basis. So this is not a long-term hold for me. And relative to the third standard deviation Bollinger Band, it's pretty extended on both the weekly chart. And if you go to the daily chart, we're up over 6% yesterday. Now, this is telling me, you know what, don't be greedy. Let's make some money real here and raise capital. And we'll leave it off today with AppLovin. We'll do a top-down view, monthly view. RSI remains, even though we were down yesterday, 93.09. So that long-term short thesis is still alive. We're still trading above the third standard deviation Bollinger Band in red, which is at current 275. So you're going to hear a lot in my analysis today of this stock, a 270 handle. So that's data point number one, 270.26, monthly time frame, third standard deviation Bollinger Band. Let's drill down. Weekly chart. RSI 93.81. This, for me to want to stay short, it needs to close down below 305. Has to. Volume is still good on the week. ADX in green, possible double top. We've seen that before. Let's go daily view. RSI was above 90, is now 85.77, still attractive. And I brought up this Fibonacci retracement sequence here on the 19th. On the 20th, we blew above it and failed to hold that support level. Big volume to the downside yesterday. ADX still remains above 65, but it's beginning to roll over. So sticking with this chart for a moment, I'm going to again reference a 270 handle. Why? Because this is support level number one. Let's call it 278. 278. Now, we could see that as soon as today. My guess is, though, is that unless you have a tremendous amount of volume to the downside, taking out all buyers that would defend that support level, my guess is that they're going to defend that support level. And they could trade it sideways for a few days, backfill, and then break what would be a head and shoulders setup. Left shoulder, head, right shoulder forming. We're using options. We have an abbreviated week next week. Do I want to sit around and wait for a left or right shoulder to form on a head and shoulders setup and hope that it breaks my way? Probably not. I would rather take advantage of a big high volume sell-off down to that 270 mark, because what do you get? We spoke about this the other day. You get IV expansion. That makes the value of our options more valuable because there's demand for put options. You get put skew. So I already have advanced orders out there to close out these positions if our support levels are hit. And the reason why we do that is because this sell-off can happen very, very quickly within minutes of the market opening. And then minutes later, you can have buyers moving in there, moving it back up. So you really don't have time. Negotiate the value of your options at X price point when you have so much volatility at the open. So I just decided, you know what, let's just keep an advanced order out there. We'll make some good money if we're filled. And I think it's possible because when you take a look at a 2-hour chart, we spoke about this chart the other day, that I would have added more to this trade on Wednesday to the short side had we broken down below this lower band of support here. We didn't do it. We did so, though, yesterday. Now, on this chart, where has been support in the past? Well, the 50-period moving average on a 2-hour chart was resistance back here in September. Then what happened? We broke out and above it. Late September, did a retest as well in September. All of a sudden, it was support. Then it became support again here in October, here again later in October. Here, there was definitely a battle that went on. Bulls won in early November. Earnings reported, gap up. I think that this is where we're going. Again, down to a 270 handle. What's the exact number? No clue. Can we overshoot this? Sure. But I think that we're going to bounce back. They're going to hold that 270 mark. So that's the game plan for today, folks. Everybody have a profitable trading day. I'll talk to you soon. Be well.